Are you still waiting for the housing market crash? Well, what if I told you the crash is already happening, but not in the way you think? The real estate market is collapsing, but this time, it's not a dramatic crash like in 2008. It's much more dangerous, slow, and stealthy, and it could be even worse than what we saw 15 years ago. Stick around to find out how the real estate market is going through a crisis in slow motion, and what crypto has to do with it. You won't want to miss this. Let's first understand the forces driving this crisis. The pandemic-driven housing boom was fueled by low interest rates, government stimulus programs, and increased savings as people stayed at home. People were looking for larger homes to accommodate home offices, and the supply of homes was severely limited due to construction delays and a labor shortage. This perfect storm pushed real estate prices to record heights. But in 2022, everything started to change. The Federal Reserve began raising interest rates to combat inflation, and mortgage rates skyrocketed. The average rate for a 30-year mortgage in the U.S. went from around 3% to 7% in just 1 year, increasing monthly payments by 50% or more for the same loan amount. The result? Home affordability plummeted. Many buyers simply couldn't afford to get into the market anymore, and the demand dried up. So, where does this leave us today? While many people were hoping for a dramatic crash like 2008, what we're seeing is more like a slow-motion crisis. Imagine a frog slowly being boiled alive in water. It doesn't realize the danger until it's too late. The market is slowly becoming completely unaffordable for the average person, and while prices haven't collapsed, they are starting to plateau, and that's leading to a very different kind of housing market crisis. Unlike in 2008, where reckless lending led to an explosive crash, today's crisis is about stagnation. The market is stuck, and homeownership is becoming more and more out of reach for most people. Now, let's compare this to 2008. Back then, people could get loans for up to 100% of the home's value, often with no job, no assets, and no income verification. This led to millions of people defaulting on their mortgages, driving the crash. But today, we're in a different situation. The lending environment is much stricter now. Banks are only lending to qualified buyers with solid credit scores and documented income, so we aren't seeing the same level of risk in the mortgage market. Another huge difference is that today, homeowners have more equity in their homes than ever before. In fact, over half of all mortgaged homes in the U.S. have more than 50% equity, which means that homeowners have a strong financial cushion. Even if home prices fall, they're less likely to default on their mortgages because they still have something to lose. In contrast, many homeowners in 2008 owed more than their homes were worth, leading to a wave of defaults. Now, let's talk about supply. The housing market in 2008 was flooded with unsold homes because of a decade of overbuilding. This pushed prices down and caused the market to collapse. But today, we're in the opposite situation. We're facing a housing shortage. The demand for homes is outpacing supply, and the U.S. is facing a long-term shortage of housing. Builders have not been able to keep up with the demand, and that's keeping prices high. In fact, we're now seeing a situation where the construction of new homes is slowing down. Building permits have dropped to a 5-year low, and builders are struggling to meet the demand. Meanwhile, existing homeowners are reluctant to sell because they don't want to give up their low mortgage rates for higher ones. This is causing a bottleneck in the market, keeping supply low while demand remains high. This imbalance is causing home prices to stay stubbornly high, even though fewer people can afford them. So, what does all this have to do with crypto? Well, the current housing market crisis has opened up a whole new avenue for investment. As the traditional financial system faces more pressure, people are looking for alternative assets to protect their wealth. Enter crypto. While the real estate market struggles with affordability, high interest rates, and low supply, the crypto market is offering investors a potential hedge against inflation and economic instability. Cryptocurrencies like Bitcoin and Ethereum are seen by many as stores of value, especially when traditional assets like real estate are becoming increasingly out of reach. Just like in the 2008 crash, where people flocked to gold as a safe haven, today, investors are increasingly turning to crypto as a hedge against the looming economic turmoil caused by the housing crisis. We've already seen how the housing market is pushing people out of homeownership. But this has a larger impact on the economy. If younger generations can't buy homes, they're missing out on building long-term wealth. The real estate market has always been a key part of the American dream, but it's becoming increasingly inaccessible for the average person. And this is driving people to alternative assets like crypto, where they can invest in something with a more global reach and fewer barriers to entry. Now, let's consider the macroeconomic effects. The high costs of housing and mortgages are contributing to inflation, making it harder for consumers to afford basic necessities. This puts even more pressure on the Federal Reserve, which is already struggling to balance economic growth with inflation. We could be entering a period of stagflation, where the economy grows slowly, but inflation keeps prices high. This type of environment is perfect for crypto, as it provides an opportunity for wealth preservation outside of the traditional financial system. So, what can we expect in the coming months? The housing crisis isn't going anywhere. We might not see the dramatic crash we saw in 2008, but we're in the middle of a housing crisis in slow motion. People are being priced out of the market, and the economic implications of this will last for years. But in the midst of this chaos, crypto is emerging as a key player. As traditional markets face instability, crypto offers a path forward for those looking to protect their wealth. The question is, are you ready for what's coming next? The housing market is only the beginning.